Alright, so as I was making this video, I was reminded of a quote from the great Warren Buffett. Not your keys, not your Bitcoin. Welcome back to the end of the world, part 2, where this episode of The Economy is way scarier than Stranger Things season 4, but at least the good news is that Bitcoin will probably not go too much lower because the Jim Cramer signal is finally in. After buying crypto and Bitcoin, Jim Cramer says crypto has no real value, and that's how you know it's time to buy back in. In all seriousness, Voyager Digital just filed for Chapter 11 bankruptcy, and this is huge. This is going to affect the entire crypto space, so in today's video, I want to help explain exactly what happened, what led to it, how this will affect us, and if we'll ever actually get our money back. And if you want to stick around to the end of the video, I'll share with you a personal story of what happened in my crypto and what I learned from all of it. But also this week, we got to go inside the mind of the central bank at the Fed Minutes meeting, which happened in the middle of last month. And the reason this is so important is because the recession is about to get worse. And that's because when the central bank gets together, the stock market always tries to figure out what was talked about in those meetings. But the public doesn't have access to that information until 2 weeks after the meeting has already happened. So in their last meeting, which happened on June 14th and June 15th, which is when they announced a 0.75% increase to what's called the federal fund rate, which was also the largest increase since the year 1994, we finally know what they talked about. And what it was is that they are now committed to fighting inflation at all costs. 10 out of the 11 voting Federal Reserve members now want the next rate increase to be 0.75% again. Only one person voted to be 0.5%, so I finally have footage of what the meeting went down like. It was pretty crazy. Jerome Powell was like, how high should we increase the interest rates by? 0.75%? 0.75%? 0.5%? What? So now the consensus among the central bank is that they will have a more restrictive policy if inflation stays high. And that's because, according to the consumer sentiment, which is measured by the University of Michigan, has hit a new low that hasn't been seen since the years 2011 and 2008. So I'll explain exactly what all of this means, what's gonna happen later this month at the next Fed meeting, and then we'll talk about Voyager and crypto and the rest of it. So let's get right into it. Hi, my name is Andrei Jikh. Hope you're doing well. Come for the finance and stay, because things are about to get worse. So first, we'll talk about the Fed and interest rates, and then I'll talk about crypto. So I'll save the best for last. And by best, I mean worst. So the next Fed meeting will happen this month on July 26th and July 27th. You can find this out for yourself on the federalreserve.gov website, but the next meeting is when they'll announce the next rate increase. So the most interesting part is that right now, our federal fund rate is 150 basis points, which is fancy for 1.5%. But come July 26th and 27th, Papa Jerome Powell has told us that the base case scenario, not best case, base case. So the lowest that rates will increase is by at least 0.5%. Now, the stock market is telling us something else. So if you've ever heard of people saying the stock market is pricing in a 50% chance of whatever, here is a part of where they get that information from. According to this fancy CME Fed Watch tool, which you might remember from my other videos, right now the market is pricing in only a 3.7% chance that the Fed will increase the rates by only 0.5%. So the truth is we're not going to increase by 0.5%. The Fed is getting serious and it's going to increase by another 0.75%. In fact, there's a 96.3% chance that the Fed will do that. And the reason I know that by looking at these seemingly random numbers of 225 to 250 basis points is because remember how I said that right now we have 150 basis points to the federal fund rate? Well, that's 1.5%. But come July 26th, 27th, it'll be at least at 225 basis points, which is 2.25%, which is a difference of 0.75% from where it is today. That's how it's calculated. I don't know why it's so complicated, but that's just how it is. Now remember, after that meeting at the end of July happens, 2 weeks later, we'll know what was discussed in that meeting. And that'll be the most interesting meeting because by that point, we will know whether we're in a recession or not. Because come July 28th at 8:30 a.m., the BEA, the Bureau of Economic Analysis, will tell us the first estimate or the advanced estimate of the second quarter GDP. And if it turns out to be negative, we are in an official recession. So we'll see what happens when that happens, if it happens. Looks like it'll probably happen. So that's the Fed, that's interest rates. Now let's talk about crypto, because it's going through its own recession. I'm about to take you on a crazy roller coaster ride of a story, so strap in, because this week we had a major crypto company declare Chapter 11 bankruptcy. Now, if you've never heard of Voyager Digital, let me explain exactly who they are, what they do, and why they're so important to this story. Voyager is a crypto company. They allow people to buy and sell crypto like any other crypto company would. The difference though is that Voyager is a public company, which is very rare for the crypto space. And unlike a private company, a public company has an obligation to their investors to be transparent about how much money they have, how much they spend, and how they manage it. They focus a lot on that transparency, which is how we know that at the end of last year, they had 3.2 million verified users on their platform, and they were growing like crazy. At the end of 2020, they had a revenue of only $6.6 million. But 1 year later, at the end of 2021, that revenue grew to $415.8 million. That's a year-over-year growth rate of 6,200%. You just don't hear these kind of numbers from public companies. Now, as of June 24th, Voyager put out a press statement saying they had roughly $137 million in cash and crypto assets on their platform. So it seemed like they were covered. And as a way to attract more users on their platform, they were paying people interest on their deposits of up to 12%, which was relatively standard in comparison to everyone else. We were told that they were lending our money to big institutions and big companies, which are seen as less risky than individuals like you and I. The truth, though, is that companies in the crypto space are not less risky than individuals, and they take crazy amounts of risk too. So they lent out $350 million worth of USDC, which is a stablecoin, and 15,250 Bitcoins worth a combined value of over $650 million to a crypto hedge fund called 3 Arrows Capital. And this is where it all started to fall apart. Here's what happened. 3AC, 3 Arrows Capital, took that money and used it to arbitrage trade on a futures ETF from Grayscale and Yield Farm. Now, an easier way to understand what I just said is they took that borrowed money and they played press your luck, and they got triple whammy and they lost all of it because one of their investments was on Terra Luna, which was a stablecoin promising to pay people 20% annual interest per year, which was just crazy. And obviously that one collapsed. Now, as soon as people noticed that 3AC would not be able to pay back its debt, guess who was one of the first few companies to have noticed it? It was BlockFi. In fact, Zach Prince, their CEO, tweeted on June 16th that he liquidated one of his largest institutional borrowers. Turns out that that was 3AC. So essentially BlockFi was one of the first few companies to notice, you guys are way too risky and you're gambling with my money. Give it back. Now, even though a British Virgin Islands court forced 3AC to liquidate and sell everything just to pay everything back to Voyager, at that point it was a little too late, and now Voyager has to go through a lengthy legal battle just to get its money back. But it is still possible that they could get some of that money back. We just have to wait and see. But it was at that point that Sam Bankman-Fried and his company Alameda Research gave Voyager a bailout loan for $500 million. And even though they gave them a massive loan, Voyager still declared Chapter 11 bankruptcy. And that's because what people missed, or what they didn't notice, was that $500 million loan was only accessible at $75 million a month. It wasn't all at once. Now, here's where the plot thickens. In that 141-page bankruptcy report, you can see that Alameda Research is listed as the second largest borrower right behind 3AC that owes money to Voyager. And you can see all this for yourself on page 13 of that document. So basically the borrower in this case is bailing out the lender, which is kind of interesting. Now, Alameda Research also voluntarily surrendered 4.5 million shares of Voyager, which put it below the 10% threshold of being considered an insider. Now, when I put all this research together, I had a few questions like, why would Alameda Research surrender all their shares? Is it maybe because they're positioning themselves to potentially buy Voyager out and they don't want to be looked at as insiders? Maybe that's the case. And why did Voyager declare bankruptcy if they just got an injection of all this money? That's probably because they didn't have access to the entire loan all at once. And thirdly, why would Sam bail someone out that he just borrowed money from? Are they in cahoots? So let me explain all that and share with you my story. This next part is a little speculative. I'm just guessing on my part, but here's my logic. The reason that we're seeing Sam Bankman-Fried's company listed as the second largest borrower from Voyager is because they borrowed a ton of money at a very favorable interest rate. And this is actually listed on the bankruptcy report. You can see that Alameda borrowed $376 million at an interest rate between 1 and 11.5%. That's because they borrowed that money in what are called tranches, or different price bundles. So they might have borrowed the first $100 million at 1%, another $100 million at 5%, and so on and so forth. Kind of like when we dollar cost average into stocks, we buy them at different price points, which are called tranches or price bundles. So I think that Alameda has a vested interest to see Voyager succeed. Also, because if Voyager fails, none of us will ever want to touch crypto for a really long time, which will obviously affect everything. Now, another question I had is, why would Voyager declare bankruptcy if they just got an infusion of money from Alameda Capital? Here's what I learned. So when a company declares Chapter 11 bankruptcy, that's the equivalent of going to the courts and saying, hey guys, here's how much money we have, here's how much money we make, here's how much we spend. We are in trouble now and we need a loan. Here is our plan to pay everyone back. That's when the courts, in other words, the creditors, look at this restructuring process. And if they like this plan, they will give Voyager this new loan. So Voyager will resume business as usual with this new payment plan and hopefully safer business practices. But if they don't approve Voyager's plan, that's when they'll have to declare Chapter 7 bankruptcy. And that's really the worst one of all. That's when they have to liquidate all their assets and sell everything to pay all their lawyers. Now, we are not at that point yet, so there's still a chance that Voyager could get that plan approved and hopefully start paying people back. Now, this last question is unfortunately something I don't have the answer to, but I'll keep looking for it, which is, why did Alameda surrender 4.5 million shares of Voyager 8 days before Voyager suspended withdrawals? Because that brought their total stake of ownership to roughly 9.5%, which is below the 10% threshold to be considered an insider for insider trading. I don't have the answer to that. I'll keep looking, so I'm not going to speculate, but I'll leave that up to you to decide. But for now, if you had your money on Voyager like I did, there is a chance that we could still get it back. So you're telling me there's a chance. There is a chance, but nothing is guaranteed at this point, but I'll keep being optimistic. And if you've stuck around to the end of this video, let me share with you my story about what happened. I had a substantial amount of money and crypto tied up with Voyager, mostly because I felt their interest rates were fair and because they were lending to institutions, which made me feel safer. But I was wrong. So I like to give generally the benefit of the doubt to people, and I don't want to assume the worst until I know for sure. So as soon as they stopped allowing withdrawals, the first thing I did was I reached out to their team because I, like maybe some of you watching, have questions I want answers to, like, will I get my money back? And after I reached out to them, they responded with literally no comment. I'm not a lawyer, but it's probably because this whole restructuring process is very sensitive to the legalities and lawsuits of everything that's going on, so we probably won't know for a while. But I have a substantial amount of money, like multiple six figures, that is locked up to this day with Voyager that I may never get access to again. So frustrating is putting it mildly. Now, the ultimate lesson that I've learned here is a humbling one. No matter how much I think I know about a company, or how big it is, or how much cash it has, or how transparent it might be because it's a public company, we have no idea what happens behind closed doors. That's why the traditional advice has always been to diversify and not keep all your assets in one place. But even that advice is kind of outdated in today's market, because if you were someone who bought Voyager and kept your money on Celsius and bought some Terra Luna, you'd still go to zero, because it's essentially like buying the same thing 3 times over. So instead, the better advice would be to keep your money offline on a cold storage wallet where you control the private keys yourself. Personally, I think the way this ends is Voyager gets bought out by a bigger crypto company. And that's because Voyager has substantial amounts of assets like US customers and licenses that these bigger crypto companies want and need. And they have an incentive to save Voyager as quickly as possible, because the faster they save them, the more valuable that investment is for them, because they need to keep that brand recognition. So that's the optimist in me. I'm hoping that we'll recover at least most of our crypto and our cash. But at the end of the day, always remember, if it's not your keys, it's not your crypto. As always, have a wonderful rest of your day. Smash the like button, subscribe if you haven't already, and above all, please try to stay optimistic and be patient, and try not to stress about something that's beyond your control. I'm staying patient for now and waiting for more answers. I will keep looking for the answers, and if I find anything, I'll keep you updated as soon as I find out. In the meantime, I'll see you back here on Monday, Friday, sometimes Wednesday. Don't forget to grab your free stuff. Stocks are down below. Then you can go track them automatically with the spreadsheet link down below in my Patreon. Love you. I'll see you soon. Bye-bye.